Hey guys, we continue with the fair value gaps, but in this video we're gonna talk about combining fair value gaps, which we know, with the liquidity grabs, which we also know. So I'm gonna show you some examples, I'm gonna show you what I mean by that, and you're gonna see live examples also, how to apply that and how to enter the trade. So let's get into the charts. Yeah guys, so let's get into the trading view, and I'm gonna try to draw you how this is gonna look, how you can apply that. And for starters, we have, for example, we have a ranging market. What does it mean? That means that price is standing in one place, yeah, something like that. We have our support zone or demand zone, depends on which time frame you're using, and we have our resistance zone. Yeah, so we have a sell side liquidity and the buy side liquidity. What I like to do is wait, which side gonna be taken out first, the buyers from the bottom or the sellers from the top. And if you're taking out the buyers, the chart gonna look something like that. Gonna be up a little bit, then the liquidity grab, the price gonna continue after that walking to the top. Why? Because the liquidity was taken out, all of the sell side liquidity also was taken out, and the institutions are getting into the market and pushing the price above. You get it? Because from all of the situation, there was some traders who had some trades like that, yeah, for example, and they was taken out. There was a bunch of them. So the liquidity is taken out. Yeah, we're gonna have huge candles. 1, 2, and 3. Yeah. After that, we have fair value gap. It's gonna be kinda big, but the market gonna fill that gap. And if the market is filling that gap, we have our entry point, and we're starting at the top if you're looking for the long position, and if you're looking for the short position, we're starting at the bottom. So now we have our entry point here, stop loss below our liquidity grab, and what I'm suggesting is target at least 1 to 2 risk reward. Yeah, this is full proven, I'm using that, so it's good, it's working. You can, of course, you can try to target resistance zone, but then you're gonna have what, 1 to 1 risk reward. It's normal, but it's better to use at least 1 to 2 risk reward. You can try to 1 to 3 risk reward if you wanna, but 1 to 2 the most optional, and this is what I'm suggesting for you. If the market is taking out buy side liquidity, I mean from the top, so we can expect the same kind of the scenario where the price going down, filling the gap, we have our fair value gap, and the price continue going down. Now let's check the charts, and I have a good example here. Yeah, we have our demand zone. Yeah, the price is going up, the buyers are pushing the Bitcoin price above. Yeah, and after that, what happened? Institutions gets in, they dumped it, closed all of the buyers from here, and after that, hard push up. Yeah, we have our fair value gap. Look at this fair value gap, which was tested, fully filled, and we have our entry point because it's starting at the fair value gap right here. Yeah, and we're targeting at least 1 to 2 risk reward. It's gonna take time, but the trade is done, and you manage to make the profit using simple information, which I'm providing you here. All you have to do is back test as much as possible. And now we're gonna go, for example, on the 4-hour time frame, because I want to show you it doesn't change the thing if you're going on the lower time frame or you're going on the bigger time frame. On the bigger time frame, maybe those kind of the things like fair value gaps and liquidations, they holding more power, because you know one candle is drawing 4 hours. So now we have our support zone. Yeah, the price are going up, the price are also rejecting, and it's going all the way up. What happened next was the liquidity grab. All the future buyers was taken out, institutions getting in, and then we can see a huge green candle. Now we have our fair value gap right here. Yeah, the first red candle and the third candle here. From the wicks we have our fair value gap. The price tested out, filled the gap, gave us an entry point. We put it like that. Stop loss below our liquidity grab, and our take profit is 1 to 2 risk reward, which is the most optional. In this case we had an amazing trade with 1 to 2 risk reward. So you can see it's pretty simple. We are waiting for the liquidity grab, and after that we are looking for the reversals, because the institutions, the banks, the governments, they're gonna start pushing the Bitcoin or Ethereum price up. If the buy side liquidity is taken out, I mean from the top, we have our resistance zone taken out here, the liquidity, we can expect the same result. The price start pushing down hard, go up a little bit, fill the gap, and after that go straight down. This is how you trade. Simple as that. Support, resistance, supply demand zones, liquidity grabs, and the fair value gaps. Basically all you need for the normal chill trading. This is what I could say. So yeah guys, thank you so much for watching. I showed you 2 examples, 1 drawing, and I hope you understand the idea behind liquidity grab and fair value gap, how we can combine them and apply that. It's important because you can make money with that, but what you have to do is not just watch the video 1 time. What you have to do is open the fucking trading view and try to find those things. Sometimes it's gonna hold, that's for sure. Sometimes you're gonna take a loss, that's happened. You cannot find the 100% strategy which is always working. But you have to practice, and you're gonna start noticing little things who are gonna help you improve your strategy. So guys, thanks so much for watching, and see you in the next episode.